Hello there. My name is Miles Pitcher. I'm with Superior Lending. This week, we are continuing our theme on non-QM loans. Last week, we did bank statement loans. This week, we're going to talk about the DSCR loans that are available. Very, very, very cool product. I'm a huge fan of these. But first, here's my contact info. Scan that QR code and you can get to my business card. Here's where rates are. Yeah, so big action, big movement. Rates kind of took a hit back here. That's a huge day of movement. But we are still putting our conventional clients into the rates in the twos, in the high twos, for those who are excellent clients. Big news is inflation. That is what the big mover in there that has really caused that whipsaw action. Reminder, we have a Spanish speaker on our team now. So those Spanish speaking clients that are more comfortable going through the transaction in Spanish, we would love to help them. All right. So let's talk about a DSCR loan, debt service coverage ratio. This is very common in the commercial loans area, but this now applies for investment properties or non-owner occupied loans, really where we use the debt service coverage ratio as the way of qualifying for the loan. What does this mean? How do we calculate it? Let me show you an example. So basically we take the lease agreement, or how much the rent is for the whole property, and then we divide that by what the principal and interest, taxes and insurance, if there's an HOA, we include that, what the debt obligation is, and we get a ratio. In this example here, if the mortgage plus taxes and insurance would be $2,000, our rents coming in are $2,200, we would have a debt service coverage ratio of 1.1. You'll notice in here we can go down as low as 0.75. That would mean that the mortgage payment is higher than or greater than the rents coming in. So that's pretty cool that we can go that low. Let me explain some of the things here and why it's so awesome and flexible for our clients. Number one, you don't have to qualify with income, right? Think about our self-employed borrowers who write off a lot. This is great for them to be able to qualify. Or someone who hasn't been on a job very long, been self-employed very long. This is incredible. Very, very cool. You do have to have a job, though. You have to, on the application, list your employer and your job. With Freddie Mac and Fannie Mae, you are limited up to 10 financed properties. And with this loan product, you can go beyond that. No limit at all. You don't have to submit tax returns. If you want to really improve your cash flow, there's an interest-only option available. And you're essentially qualifying based on the cash flow of the property for this loan, which is really, really cool. I know you guys have felt this in the past, that the common sense underwriting has really been tossed out the window on our normal traditional loans. On these non-QM loans, especially this loan, there is common sense used. They will look at it and say, okay, these borrowers own 10 other properties. They're all free and clear. They have millions of dollars in the bank. They are going to be okay, and they will give this loan. They will look at the whole picture and see if there are compensating factors that help this scenario make sense. Can there be a prepayment penalty? The answer is maybe, and there's a choice there. For example, if you allow and choose to have a 5-year prepayment penalty on this loan, then they will give you a better interest rate and allow you to have a smaller down payment. But if you choose not to have a prepayment penalty, or maybe it's 1 or 2 years, then it goes the other direction. So there's flexibility there with that. I've alluded to this. Rates will vary depending on your loan to value, or how much down payment you have, your credit score, the debt ratio that is calculated, your experience as an investment property owner. You don't have to have owned investment properties before, but if you do, it does help. Yeah, it's pretty cool. Okay. I wanted to compare for you guys some differences between a Fannie Freddie loan, investment property loan, and this DSCR loan. So like I mentioned, you can have unlimited. This says 680 on your minimum FICO. I actually have some lenders who will go down to a 650. The next two are really cool, and I love that you can do a non-warrantable condo. Yep, absolutely. And you can close in the name of an LLC on these loans. Very, very cool. So just be aware of these as you are showing investment properties to your clients or talking to them. And maybe somebody says, hey, I would love to do an investment property, but I can't qualify because of this. Maybe it's their income, or maybe they just became self-employed. We can help them. Generally speaking, down payment's going to need to be 20%, maybe more, 25, 30% down. Just depends on the scenario. Also, I lost my train of thought. But yeah, the down payment rates, depending on all these factors in there, but you're probably going to be somewhere 4.25 up to 4.99, just in that range. But very, very cool. Let me know if you have questions on there. And it's kind of hard to give some specific scenarios because so much on these, and pricing can change based on the guidelines or the criteria or compensating factors of the loan. So have a great week, guys. Remember, we love helping clients understand fees. We love presenting options to them, just like this is an option for our investment property clients. So have a great week. We'll talk to you soon. Miles Pitcher, Superior Lending.